Hello, this is my first video. In this video, I'll be explaining national income. National income is the income earned by a resident of a country in its economic territory within a single year. Broadly, there are four players associated with national income. First one is household, second one business firm, third government, fourth foreign entity. Now we shall learn methods of calculating national income. First method is expenditure method, second income, third production method. Now with the help of this diagram, we shall learn how this income is calculated. Look in the upper part of the diagram. In the upper part, household supplies the factor of production, that is land, labor, capital, entrepreneur to business firm. In return, business firms gives wages, rent, interest and profit. The wage, rent, interest, profit are income of household but expenditure of business firm. Hence, we can say expenditure of one player and income of another player is equal. The calculation of national income by compiling income of household is called income method. The bottom of figure shows the flow of goods and services that are produced by business firm and demanded by people, for which household pay money. Here the value of goods and services produced is equal to the expenditure, that is saving, incurred by household on purchase of these goods and services. Both are equal, so national income can be calculated by calculating total value of goods and services, that is production method, or by compiling total expenditure incurred by people, expenditure method. Now we shall learn about expenditure method. Expenditure is equal to consumption plus saving. Saving is nothing but the investment. The following hits are the look at this flow chart. I'll explain it. The following are the different heads of expenditure. First, private final consumption expenditure. It is final consumption done by the private individual or household. Government final consumption expenditure. It is the expenditure done by the government for the benefit of community at large and for providing services like control of law and order, disease control, etc. For example, salaries given by government. Note, the expenditure that government makes on subsidies is termed as social transfer and is not added to GFCE, that is government final consumption expenditure, but added to private final consumption expenditure. Third, gross capital formation. It comprises the following item. First one, gross fixed capital. It refers to the fixed asset like plant, machineries used in production. Second, inventory. These are unsold finished goods which have not been consumed yet, but expenditure on such product has been incurred. Third one is valuables. These are expensive and durable goods such as jewelries, work of art, etc. These are one form of investment which can be sold during a needy hour. Earlier, the valuable were treated as consumption, but in new series, it is treated as an asset. Export and import. While calculating national income through expenditure method, exports are to be added through no consumption of exported item has happened within India, but production has happened, and imports need to be subtracted as though consumption has happened but no production has happened within India. Okay, we shall be looking in other methods in next video lecture. Thank you.